Hey traders and investors, it's Serge Berger here. What we're going to talk about today is the Nasdaq 100. I got a lot of emails over the weekend. Uh, a lot of people sort of semi freaking out over the downturn here in Nasdaq. The Nasdaq Composite is off like 5.76% off the year-to-date highs, and of course that's what happens when you have some of these overextended sectors and groups like the social media and biotechnology places, sort of mean reverting. And mean reversion really is the key word here. I think it's important to keep things in context. Okay, so my goal here for the next couple minutes is to kind of just show you how, this is really one of the best areas where to use technical analysis in the broader sense to really map out some good levels. And I mean levels. I don't mean absolute points, right? If you draw a line on a Nasdaq or an S&P 500, and you try to sort of define an absolute point to the tick where you're going to find support or resistance, you're going to be sorely disappointed over time to find out that that basically never works. So what we're looking for here is to draw a couple lines just to see if we can get some perspective. And it's really simple. It's no rocket science. What it does require, though, and what is really important, is that you don't force trades in this type of environment. So I have the QQQs here, which is the Nasdaq 100 ETF, of course. And very simply, I drew a support line. This is a regular chart. It's not logarithmic, from the lows in 2009, and it is connected to lows, right? So if you look at that, you can see that obviously at some point here, I'm going to call it in the spring, maybe early summer of 2013 last year, the Nasdaq started to really kind of go higher and move higher, almost in a straight line, and disconnecting away from this trend line, the black trend line from 2009, really becoming overextended. From that point of view, it really was just a matter of time until a mean reversion move sets in. So let's zoom in a little bit closer just to kind of see what we've done so far. So far, again, drawing very simple trend lines, you can see we've sort of broken, a first trend line which really dates back to last summer. So this little channel, this sort of orderly uptrend since last summer has basically now broken. But if you take a step back and look at this sort of through a 12-month and multi-year view, you can see we really haven't gotten anywhere. We're still way extended above the 2009 trend line, right? So you can see that way extended above that. So really, that's sort of the ultimate support level that one could look for on the Nasdaq, where to me personally it would get more interesting again to look at these kind of stocks sort of more broadly speaking. Now the issue of course is one of time frame and one of sort of money management, right, risk management. So this level currently it's about 78 on the QQQs. That's about 9-ish% lower. Maybe by the time if the index gets there, it may only be like 7% lower from current levels. So that's quite a sizable move lower. A first more important area that I think we're going to get to is a 200-day moving average, and that is about 4-ish% from Friday's close away. So to make a long story short, you can see some very simple trend lines, some moving averages, a little bit of context, looking at slopes and things like that can give us a lot of perspective of understanding that so far the movement in Nasdaq hasn't really been very dramatic. On top of that, you can look at things like some of the volatility indices on the Nasdaq, and you can see really no one's freaking out quite yet. So there really is plenty of room lower. It doesn't mean I want to go short the Nasdaq here. I'm just saying for perspective, we really haven't corrected all that much, all things considered. Hope this makes sense. If you got any questions, as always, you can tweet me at my Twitter handle, which is SteadyTrader. Take care.